On October 7, 2025, gold didn't just break a record, it shattered expectations and sent shockwaves through the global financial system. For the first time in history, the price of gold surged past $4,000 an ounce, marking a milestone that few predicted would come so soon. This isn't just a minor blip on the radar, it's a seismic shift in the world of finance, signaling a global rush for safety as uncertainty and anxiety grip markets everywhere. Gold's value has skyrocketed over 50% this year alone, outpacing most major stock indices and breaking free from years of relative stagnation. Investors who once doubted gold's potential are now scrambling to get in. The world is on edge, and people everywhere, from seasoned investors to everyday families, are seeking stability in gold's enduring value, hoping to protect their savings from the storm. This rally isn't just about numbers on a screen. It's a direct response to deepening economic turmoil, escalating geopolitical conflicts, and rapidly shifting central bank policies that have left many feeling uncertain about the future. Gold's meteoric rise is impacting everyone, from retirees worried about their nest eggs to national economies recalibrating their reserves, making this more than just a Wall Street headline. It's a story that touches lives across the globe. In the coming scenes, we'll break down the powerful forces driving this historic surge, explore the ripple effects across global markets, and reveal what this means for the future of finance and your own financial security. So let's dive in and discover why, in these turbulent times, gold is shining brighter than ever before. Gold's meteoric rise is fueled by three powerful forces: fear, institutional buying, and FOMO. But what's really driving this surge, and why does gold seem more attractive now than ever before? Global anxiety over political tensions, wars, and economic instability has driven investors to seek refuge in gold. When headlines are dominated by uncertainty, gold's reputation as a safe haven asset becomes even more appealing. Central banks, especially in emerging markets, are buying gold at record rates to diversify away from the US dollar and shield against currency risk. These institutions are making long-term bets, signaling a shift in global financial strategy. This isn't mere speculation. It's a strategic move that signals deep concern about the future of fiat currencies. As inflation bites and currencies fluctuate, gold offers a sense of stability that paper money can't match. Meanwhile, retail investors are piling in, afraid of missing out as headlines tout gold's new highs. Social media buzz and financial influencers are amplifying the excitement, making gold feel like a must-have asset. Gold-backed ETFs saw $17.3 billion in inflows in September alone, amplifying the rally. These investment vehicles make it easier than ever for everyday people to get exposure to gold, further fueling demand. The result? A self-reinforcing cycle. Fear and strategy drive demand, prices rise, and more investors rush in, creating a feedback loop that pushes gold even higher. But there's a catch. Supply can't keep up. Gold mining is expensive and new discoveries are rare, pushing gold into uncharted territory as demand outpaces what can be produced. This is classic supply and demand, but on a global, historic scale. As the world faces new uncertainties, gold's luster only grows brighter, making it a centerpiece in the story of modern finance. Global instability is turbocharging gold's ascent. Wars in Ukraine and Gaza, US-Iran tensions, and political crises in France and Japan have all rattled markets. In the US, a government shutdown and domestic unrest have only deepened investor anxiety. Each new headline, whether a conflict, a resignation, or a currency crash, reinforces gold's status as the ultimate safe haven. Investors worldwide are fleeing uncertainty, seeking the security that only gold provides. Gold's appeal is universal. It's not tied to any one country or government. In a world where trust in institutions is eroding, gold's timeless value stands out. That's why today's geopolitical chaos is a primary driver of its record price. Central banks are quietly reshaping the gold market, making moves that are sending ripples through the global financial system. While these institutions have always played a pivotal role in the world economy, their recent actions signal a significant shift in strategy, one that could redefine the future of money and reserves. Once content with holding vast reserves of US dollars and other major currencies, central banks are now buying gold at an unprecedented pace. This surge in gold accumulation is not just a passing trend, It's a deliberate, calculated move that reflects deep concerns about the stability of the current financial order. The motive? De-dollarization and a hedge against political and currency risk. As global tensions rise and trust in traditional reserve currencies wavers, gold offers a timeless safe haven. It's a strategic asset that transcends borders and politics, providing security when other assets may falter. By stockpiling gold, nations gain independence from U.S. policy and insulate themselves from sanctions or dollar volatility. This move is especially important for countries seeking to assert their sovereignty and reduce their exposure to external economic pressures. Gold's neutrality makes it the perfect reserve asset in a fracturing world. Unlike currencies tied to any one nation, gold is universally recognized and trusted, making it a powerful tool for central banks navigating uncertain times. Central banks are also guarding against inflation and currency debasement, as governments print money to manage debt. With mounting fiscal pressures and unprecedented stimulus measures, the risk of eroding currency value is higher than ever, making gold an attractive shield. Unlike fiat currencies, gold's supply is finite. It can't be printed or devalued at will. This scarcity is a key reason why gold has maintained its value for thousands of years, outlasting empires and economic systems alike. This institutional buying provides a solid price floor and reassures other investors that the rally is built on real, lasting demand. When central banks step in, it signals confidence in gold's enduring worth, encouraging private investors to follow suit. Central banks are in for the long haul, making gold's current surge more stable than past speculative bubbles. Their steady accumulation suggests a fundamental shift, not just a short-term reaction to market swings. When the world's biggest financial players move in unison, the message is clear. Gold's role is more vital than ever. Their coordinated actions are shaping a new era for global reserves, one where gold stands at the center of financial security. Their actions are a quiet vote of no confidence in the current monetary order, and a powerful reminder that in times of uncertainty, gold remains the ultimate store of value. It's not just central banks. Everyday investors are fueling gold's rally. FOMO and distrust in traditional finance have driven a surge in retail buying, especially through gold-backed ETFs. In September alone, ETFs saw record inflows as individuals rushed to protect their savings. High inflation, volatile markets, and currency fears make gold's reputation as a store of value more appealing than ever. Physical demand is booming too, especially in India, where gold is both a financial asset and a cultural tradition. This broad global demand, from Wall Street to family jewelers, creates a powerful foundation for gold's price. Gold's appeal is both financial and cultural, making its rally uniquely resilient. The weakening US dollar is pouring fuel on gold's fire. As the dollar falls, gold becomes cheaper for international buyers, boosting global demand. The Federal Reserve's anticipated rate cuts and hints at more stimulus have investors betting on further dollar declines. Lower rates make gold more attractive compared to low-yielding bonds or cash. The return of Donald Trump and renewed political uncertainty have only heightened fears of currency debasement. Investors are hedging against the risk that U.S. policy will erode the dollar's value. Every sign of economic slowdown or Fed pivot is seen as another reason to buy gold. The path to $4,000 gold is paved by both global chaos and deliberate policy choices in Washington. U.S. monetary policy is now a powerful tailwind for gold's historic rally. This gold rally isn't like those of the past. Unlike the 1970s, gold is rising alongside booming stock markets, not just as a hedge against crashes. Investors are buying both stocks and gold, seeking growth and protection in a world of uncertainty. The surge is underpinned by massive strategic central bank buying, not just retail speculation. This institutional support creates a stable price floor and signals a long-term shift in global wealth allocation. The digital age amplifies every move. News spreads instantly, accelerating both fear and FOMO. Record ETF inflows show how quickly capital can move in today's interconnected world. This rally is faster, broader, and more explosive than anything we've seen before. Gold's role has evolved. It's now a core asset for both growth and safety. With gold at record highs, new investors are asking, is it too late? Don't let FOMO drive your decisions. Chasing a rally can be risky. Gold should be a long-term, stabilizing part of your portfolio, not a get-rich-quick bet. Financial advisors suggest allocating 5 to 10% to gold as insurance against market turmoil. You can buy physical gold or, more easily, invest in gold ETFs for exposure without the hassle. Research your options and understand the fees before jumping in. Consider buying on dips or using dollar-cost averaging to avoid buying at the peak. Patience and a clear strategy are your best allies in volatile markets. Remember, gold is about protection, not speculation. Gold's surge past $4,000 is a referendum on global anxiety and eroding trust in traditional finance. This rally is driven by geopolitical turmoil, central bank strategy, and a wave of investors seeking safety. Gold has reclaimed its ancient role as the ultimate store of value in uncertain times. Its appeal has broadened, no longer just a hedge, but a core asset for growth and protection. Central bank buying signals a lasting shift, not a fleeting bubble. The lesson: don't chase price, but understand the forces behind it. Gold's lack of yield becomes its strength when other assets are threatened. In a volatile world, gold remains the essential financial anchor.